Hello and welcome to the Friday wrap up brought to you by David Gokhstein and the Gokhstein News Network. I am your host, Landy, and today is January 30th, 2026. And we have gotten the move kind of across the board, hitting many of the targets that I talked about in the Wednesday video during the check in, the Monday video prior to that, and last week and some of the weeks prior. Especially with Bitcoin, since kind of hitting the overhead resistance at that weekly overhead at 98 to 101, kind of hitting the bottom side area there, kind of getting front run as well before hitting it directly at 98. And then heading back into some of the weekly structure that we previously talked about between 93 and 86 on a close. And Bitcoin has come down thus far to retest the prior low. And it remains to be seen whether or not we'll see that move below the prior low, of course, that being the 80,000 to 80,500, depending on your chart here on spot. It is me failing to actually click the right thing to grab the arrow. But here on spot, it's the 80,524, which is a big weekly level. Between the closes at 80,000, 500 and right around $78,000. And of course, we have now seen that move. This is not surprising. If you've been watching my analysis for any length of time, we were well aware of this potential move. Should $86,000 not hold. Now, what I will pull up here is the typical chart that I show you with the weekly zones of interest. Why? Because Bitcoin plays the weeklies just so nicely, right? Let's review real quick here. Bitcoin came down and, of course, it went up, got to the point of control above the 93.5 weekly once we started to see closes above. This was the first close above, went into higher low structure with this nice higher low consolidation. Came up directly, tapped on the point of control of this entire range up here specifically at just above $96,000. And then we had our zone between right around 96 to 98. Price did test up towards the weekly zone up here between 98 and that 101, coming up just shy of $98,000 there at 97,963. Right back down to the weekly close at that 93.5. Got the close open on it, right down to the 89 and under level. Tried to reclaim 89, but could not hold it. Got under it. Tapped on 86, tried again to get above, the 89 to 90 area, which was a swing higher low and lower high on the weekly between the 93.5 and $86,000 closes. And in this case, well, what did it do? Lost it, went right for what? In the Thursday candle, right for the area we talked about, 93.5, anywhere below 86. The zone is 93.5 essentially to $86,000. It did wick slightly below. I'm sorry, what did I just say? 83.5 and $86,000 is what I meant to say. So, it did swing below it, but closed kind of right on it. And right where the close opens coming in, closed, a little bit below it. Then we got a nice swing down towards the next big weekly level, pulling up just shy of that $80,500, $80,000 area here on spot at $81,000. And it did close back above 83.5. Now, this is one of the scenarios that I talked about that we do need to track, right? There's a couple scenarios here. It's either going to be continuation below this low for the daily at least, and then possibly even the weekly, but beware of swings into this area between, basically 78 to 80. Below that 80,500 swing low here. So 78 to 80, these are the closes. We do have a swing just below there at 76,555. That's this swing over here on the weekly. And I believe that might be the swing. Yeah, that's the swing that the weekly closed above, right? When it put in the 78 and $80,000 closes. And, the $78,000 close was from this downtrending structure. And then we got the close slightly above the swing, and then it broke the downtrend. So just be aware of dips into this area. If it does lose 78 to 80 and then the mid 70s, it's going for that low on the monthly at 74 for 2069 on spot. That'd be continuation. Any closes below this prior week would be continuation of this move down into those that prior support zone. Anywhere below the mid 70s, we're looking, anywhere between essentially 68 to 70. You could even bring that down to the 67 300 area, which is, it is a point of control for some of the move up. If you were to take some of the longer term swings, we'll touch on that on Monday a little bit more. But just keep an eye on it over the weekend. If there is any kind of geopolitical events over the weekend, just keep an eye on volatility. But we'll evaluate kind of the areas of interest if it does get continuation. But in this case, we still have like clear areas of interest to be aware of back to the upside, right? $86,000. That is where the lower first standard deviation of the Bollinger Band set is essentially right now. So above 86, look to 89 to 90. Anywhere above there to break this current daily downtrend, we would need to see closes above right around 90,500 or so. If you start seeing that on a daily close, then the downtrend is broken. That doesn't mean that it can't come back down and test further or try for higher low, equal low structure. But if you're looking for continuation, what's it going to look like? It's going to look like a downtrend, right? You got the lower low, lower high, lower low, lower high, lower low, and you'd be looking for, continuation on any bounces from here, or you're looking for this to break down right into the zone here. But beware of lower highs and then lower lows that come in and test. The other thing to be aware of course, would be if this does become the low, is a trend break back to the upside. And then that's where, we can look for either deviations, and it doesn't mean that it's going to come all the way up and hit 93.5, just an example. But, you look for a higher low, equal low structure that can break that and kind of reverse its way out. You'd get a lot of inverted head and shoulders pattern enjoyers calling that one for the way that this is specifically drawn. But if it were to be a deviation, for instance, above this high, right? You don't want slight deviations that come down and just, make lower lows and get continuation. So just be aware of that. Couple different scenarios that can play out, but we have a clear trend break area to pay attention to at that 90,450. So if we start seeing Bitcoin trade back above the common swing between these two weekly closes at 86 and 93 at around 89 to 90, look directly to that basis band where 90,500 or so is. And if we were to see a trend break, then we can start evaluating a reversal setup for higher low, equal low structures that relates to wherever this low comes in. Pretty simple, straightforward stuff, to be honest. Let's go ahead and actually throw a horizontal here. I know I had it on at one point and then I must have deleted it or something. I did something. BBWP is noting that, this is, this is a retest of the lower second, lower third zone. So beware of bounces from here. It doesn't mean that it can't get continuation. Again, anywhere below 83.5, fair game down to the current swing low and then the prior swing low into this zone between 78 to 80, at least initially. And then any breakdown of 78, we're looking mid 70s, 75 to this 76, 555, and then anywhere below there, we're looking for a direct test and or swing of that 74, 420 and 69 cents. So, and then, upper 60s, lower 70s from there, obviously. Yeah, not really anything too crazy. Pretty expected, actually, based on some of the criteria that we've been looking at as a very likely scenario. The big thing to really pay attention to now is that weekly, right? And we'll go ahead and remove the support and resistance zones of interest here. Let's go ahead and actually put this down in our weekly expansion zones. And go ahead and get rid of that. And then just go to the weekly here, right? Weekly criteria is the same, right? It's beware of, it's a very different setup than it was prior, right? This is expansion to the downside. It's not initial compression into expansion, getting a bounce off of the expansive territory. We had a close through, so true expansion, lower high. So, back here last year in Q1 to Q2, we had the trend break and then the swing of the low with a close above the prior low, right? For the 74, 420, 69, higher low in the monthly there, and then a downtrend break of that 88.8 or $89,000, that swing recovery there. And then, the uptrend began from there, right? And that was contingent on no closes below that 76,555 swing. While this could even play out like this, because there's this support zone here, and then there's the prior zone that wasn't directly tested, that was resistance that could act as support on the way down, right? With a nice strong bid likely in those areas if it did hit it. But beware of swings below this low into this lower second standard deviation, which is now right where that swing low is, that close above this wick low at that 80,500 and try to take this lower high at 98 out. This is not the same setup that we've had prior, and it's not the same band setup. This is a bearish band setup if it did something like that and didn't get continuation. Now, the other thing to be aware of is, this potentially becoming the low. If it does become the low, beware of, a higher low to lower high break, right? This would, trend reversal setup. The most attractive trend reversal setup would be sweeping the low, right? And I'm just using the path tool as an example. Like, I'm not saying that it's destined to hit these areas, but you do need to be aware of where the lower second is. It's right at that 74.4 area. And a swing of it and a close back above would be, a bullish scenario, right? And then try to go for a downtrend break above 98. But, a big but, and I will not lie, the other scenario is that if it doesn't do something like that, whether it puts in a lower low swing that closes back above, or if it puts in, a higher low on the weekly that tries to trend break back above, in the bullish case scenario, it's still very, very heavily weighted towards the bears. When you turn on moving averages, it's a very different setup, right? So we are below most of the major moving averages. Now, granted, on the weekly, it's right around the 100 EMA. And close open right on it with the swing down, which would actually lend itself more towards a continuation move, to be quite honest, where you get something like, the retest of the overhead moving averages, a close open on the 100 EMA, and then a move down to the 200 EMA, which is right now in the upper 60s at $68,000. Likely going to close and be somewhere around 69 to 70 this weekend. And that's where, many would be looking for continuation likely. And of course, that would be a retest of the highs over here. And, the big thing is you see the moving average set up here that even if it did put in a higher low or it swung the lows and closed above, if it swung this low and then closed above and did something like what we saw last year, Q1 to Q2, just be aware that heading back up towards that 50 would be, a big weekly zone. Hey, that's just so happens to be right where this close is, right at 101 in that zone that it got rejected from at 98 to 101, this low right here. So just be aware of that, even if it did play out in the bullish fashion or set up for a bullish move. Now above there, maybe it can get compression of the bands and try to go in and up trying to tag the highs, but it is a bearish setup right now. Either way, on a bounce either in a higher low or a swing of the low. It's looking, it would be a bearish setup still, right? And then of course the other way that it could play out for price action would be, continuation to the downside on a breakdown of the current lows and the prior lows from Q1 to Q2 of last year, right? So that's just something that you need to be aware of with Bitcoin's price action. Now, I'm still not saying that I've mentioned this before. I haven't called a macro high, and I'm willing to be late. I called locals at 123 to 125. We got no weekly closes. We got the weekly close at 123. We got a daily close at 125 with that swing to 126. I called it a local top. Around the at the time where the monthly was set up for the bands and where it was confluent with the weeklies. That was a strong area. If that ends up being the macro top for a little while, then so be it. I'm okay with being late to that call. But, I'm just being honest with you. The biggest thing right now is this is a bearish setup, but it's not necessarily totally over for the bulls. Not yet. It hasn't been confirmed. Certainly looking that way, but it has not been confirmed just yet. The band setup is the most bearish setup right now. The only way that we would really see this turn into a bullish setup for not just a spike of the highs and then rejection back down, or a swing and rejection back down, would be if we saw something like one of these bullish setups play out. Let's just go with a swing. Let's say it's a swing and close back above. It breaks the downtrend. It could get all the way up to like 110, and that would still be a bearish setup. That's the upper first, and that's typically when you see like reversal setups. That's where you would see a rejection somewhere around that upper first to upper second zone, which would give it quite honestly a chance at the highs, but it would still be a bearish setup. What you would need to see is a recompression on the weekly, or volatility continuing to really come down, and then come down into a higher low equal low setup in that compression as the bands squeeze again, and then try to get a leg up further, right? That's what the bulls would want to see. But the band setup would provide for a nice volatility squeeze of the bands kind of looping in and around and getting a compression. Being above the basis would be the kind of the base criteria. Kind of above the basis and lower first down here into a compression while these like squeeze back up, and that's where you'd get something that would look a little bit like this starting to squeeze back up. You get the basis kind of curling around. You get the lower second and lower third kind of swooping down and under. And then you'd get kind of the bands kind of going like this and squeezing in on price, and then breaking out above the upper second, upper third to get that actual expansion. Wrong tool there. But that's where things would turn out bullish, and that is available to the bulls if they can hold this area in a higher low sweep of the low fashion without that continuation. But as it stands right now, it is a very bearish setup. So I'm not going to lie to you. Definitely a bearish setup. And, but yeah, I mean, it's not over till it's over. And that's something that you got to learn that could take a very long time. Part of that is that, we're in a compression on the bands for the monthly. And more importantly, we're in a compression on the bands for the quarterly. Now, what I will say is, we start seeing like the monthly, if we start seeing the lower first get dropped towards that lower second, right around here, let's just mark this. So lower first is currently on the monthly. We'll just kind of try to line it up. It's kind of rough, but we'll just kind of try to line it up. But if you look at the quarterly, lose the upper first on the quarterly, and essentially it's mid 50s from there, right? Mid 50s, low 60s from there, and even down to below the mid 50s on a swing of the basis band. So just understand kind of the quarterly outlook here, even though this is a compression on the quarterly, and we have, we've had a bull market for Bitcoin on the quarterly. And let's go over to Bitcoin here and go to the index. This would be the first quarterly in Bitcoin's history since, getting the Bollinger Bands, with the Bollinger Bands having enough data to print, that this would be the first quarterly where we've had a bull market. Yes, this is a bull market, and we even got a bull run above $69,000. That would be the run portion of the bull market. That's where, we would see essentially for the first time in Bitcoin's history where, if it did turn out to head back to the basis band, where we didn't see a quarterly expansion, right? So during a bull market. So that would be interesting if it does happen. And I'm not saying that it can't happen that way either. So understand that even though I said I will call the macro top what it is once it's confirmed, understand that it's definitely set up for this to be a macro top. But it's still early in the month. Or I'm sorry, it's not early in the month. It is early in the scenario where that's going to start playing out. If it's going to start playing out, we're probably going to see it start to get rolling pretty quickly, either back to the upside for some recovery of overhead resistances, or it's going to get its continuation probably pretty soon. So it's pretty early in that process for where it would be, trend breaking on the monthly and possibly then finding, lower low to maybe lower high kind of scenario, or, nuke through some levels. Who knows? Just watch it and define the criteria. Everything that we've talked about in this particular scenario, and even though I'm giving you the criteria for the upside on this big downside move since the highs, I'm not just trying to keep hope alive. It's all about understanding the conditions. And when you understand the conditions, then you can formulate a plan around those conditions, right? And it's not over until it's over. And it is, if it's going to be over, we're probably going to see it be over pretty quickly here soon in terms of confirmations. So what does that lead me to? Well, let's go look at Bitcoin versus gold on the, I'm sorry, this is gold versus Bitcoin. This is gold priced in Bitcoin. Which one did I want to actually pull? This one, Bitcoin versus gold. You're going to see and hear a lot about this. There's going to be a lot made of it as well. But understand that it already broke into its macro downtrend. So it's in a bear market versus gold right now. Got the lower high, lower low on a high time frame like the monthly. Now, of course, when you look out to the quarterly, you'll note that it is also a trend break in this case. So just be aware. Could it be getting towards, that Bitcoin versus gold where, with the big retracement on gold for just the daily, by the way, to put in a high, same with silver, very volatile, but hitting all the areas that we've talked about for conditions of breaking down each level. We saw it all play out kind of in one day, right? And in this case, just understand kind of the lay of the land. I agree with those that are looking at, the performance versus, Bitcoin versus gold in the past 5 years. One of the biggest things that I do like to stress is, when you go up 410 million% versus another asset, a little bit of consolidation is needed and required. And we've been talking about, although it wasn't the focus until people started really getting interested in it on the timeline, gold and silver we talked about for a long time. But the gold trade, what I talked about when we were on Wednesday was that it would need to close below right around $5,000. And then we're looking, 4,800 to this area down here, essentially 4,800 to 46, and then kind of that 46 to 47 area. Did not quite hit that. I mean, no one could have predicted that it was going to go all one shot back to the basis band here, which has moved up since this gap over here. But even above 4,500, this is a big move up and a big move down for gold. But this is a higher high. We need to see structure play out. Higher low would be in play above the this last higher low before the gap up, which was that 45.36, right around that 2,414, and really above there, it can put in higher lows, and then it's all about a structure change for gold, right? So that's where you got to look for something like, you got your last higher low to higher high, and then if it puts in like a higher low, then you look for lower high, lower low breakdown, right? And obviously, if it breaks down from 4,500, then you'd have lower low, lower high. More likely going to play out that way, especially with this big expansion overhead. But if it puts in another higher low, you cannot rule out higher highs, right? The 57 to 5,800, even $6,000. You can't rule it out until the move is actually showing you a little bit more, right? This is just a high put in, so it's either going to put in a higher low or it's going to put in a lower low, and then we look for either that being validation or invalidation of structure. When looking at the weekly, there's the criteria right there. Essentially, anywhere below that 4660, 4700, we'll put in a high on the weekly. This does look very toppy, at least in the medium term, and potentially in the macro. But just right now, it's simply looking like it could form. We have to see the next week's candle, but looking like it could be a weekly high. Silver, same deal. This did close the high on the weekly. Nice move all the way back down. What did I say? Anywhere below, this was obviously I've been talking about my trade on this and how I was building that trade across different stages and even here a little bit. And it did very well all in one shot. So, the big thing was any close below 110 would put in a high. Need to see below that 103 to 98, and then it was really about coming back to the $90 region right around this low. And then we have kind of 88 to 90. Anywhere below there, we're looking mid 80s, and then all the way down to 70. If it's still above 70, looks fine. Now what this did is it took out this little bit of a higher low swing here. But realistically, if you're looking at closing higher lows, where's the closing higher low? It's at $73, almost 74 right here. If you're looking at the closing candle structure, because this was not even a confirmed high, got a gap up, and then, technically a structural higher low. But if you're looking for your rope closures on it, you're looking at this area. I would say that in my book, this is structure broken, likely going to head up where if it does continue up and doesn't continue down through 70, in which case things get pretty nasty down to the mid 60s. And anywhere below there, we're looking 60 and under down to the mid 50s and possibly even $50 down there, the prior highs at 49 to 50. But realistically, when you have this very volatile zone that it's working in, if it does get a nice bounce up, back above the basis around 90 to 92 here, look for 95. Anywhere above there, 98 to $100. Anywhere above there, we can start looking right back to this area around 110. But very likely going to start looking for a reversal setup. And this is going to be something like, a reversal setup where it does something like this, and obviously like what I was just showing with gold. It doesn't even have to go that high. It can even be a local lower high, right? The 88 to 90 or basis band or whatever. Doesn't really matter. Below 70, that's where things start to fall apart in earnest. Weekly, below 70, things start to fall apart back to the, mid 60s, $60 even, and maybe even more, to the mid 50s. But basis band is right above 60 at right around 62. It's probably going to open at around 62 and a half, 63, maybe more. If it starts to open up towards 65, that's going to be some pretty dangerous criteria if silver gets there. Very likely sellers rallies after that. Just be aware. Let's go ahead and take a look at indices real quick. Daily, right back to the bottom side. Some of the areas that we talked about. We're going back into a compression, tag the lower second here. This is where, if we see, 48.30 lost. I'm sorry, 48.430 lost. We're looking, 48.2 and under to 48K, and then possibly down to the upper 47s thereafter. That would be on expansion into an area of prior support. Just be aware of that 48.431.57 here to the downside. If we do see a recovery back above 49.150, 49.2 region, look right to this high. If the high of this doji is taken out at 49.292 or 49.3, you can start looking back towards the 49.5 region, and then potentially up to 49.621 highs to start running 49.750, 49.8, and maybe even 50K. When looking at NASDAQ or NDX in this case, this is higher high structure. So as long as it's trading and closing above this lower low, it's more likely going to put in what? A higher low. And then it's all about trend. And honestly, 25.350, 25.4 is the area to watch if it does swing down for further. If it does go for more, then it's going to be testing in and around this low and this low swing right here where the lower second is around 25K to 25.1. Above there, it's actually pretty safe to try and put in a higher low. And it's all about going back for the highs again and trying for more in the low 26K area up to 26.3 and 26.5 above there. If we do see the low dropped, I mean, obviously I'm going to talk to you on Monday, but if we do see this low dropped at, right around 25K, I'm looking for expansion, down to that, 24.5, 24,650 here, and then start working the mid to low 24s. So SPY has a higher high. And again, same setup as NASDAQ in this case. As long as it's above the last lower low here, it's more likely going to put in the higher low structure. And then it's all about taking out the highs, going for 700, 703, 705. If it does lose this area here at 686, 685 on a close specifically, we could start looking down to the low 680s around 680 or 679 in this case to 682. If that's lost, it's going directly for that lower low. And this was a deviation around that 675, 676 area, and then probably quit pretty quickly below to 670 from there if it does get expansion. And that's going to be it for today. There's not too much to say, really. I mean, this is all stuff that we've been talking about and tracking right along. Granted, was it a big move in a single day? Absolutely. What triggered it and all this other stuff? I mean, realistically, the day prior when you saw some news coming out about there was some fear coming out the day prior. So like before the actual close, when we were like, I'll give you an idea here. It would have been Wednesday, Thursday. So it would have been the Thursday candle, which is the big move down. Where was the fear coming in? It was, I forget which day. We had trade deficit. The trade deficit jumped. It was historical as in October and then jumped basically 94%. This means that And in this case, it's because of a decrease in exports and increase in imports. And of course, with the tariffs now, and a lot of large players, having to actually face those tariffs, and in reality this year, whereas last year they kind of all loaded up on goods, and warehousing a lot of stuff for stock ahead of the tariff implementations in Q2 of last year. They had runway essentially until Q4, and then Q4 is kind of when they had to start actually facing the brunt of the tariffs. And what did we see then today and Friday in the Friday candle? Well, we saw PPI numbers come out with a substantial increase. At the same time that was happening, there's some geopolitical stuff going on. There's global stuff going on in terms of markets as well, in particular bonds, and some currencies. And then we had gold and silver flush out really, really in a big way. And when doing so, delevered quite a bit. Nice jump in VIX, but really not anything too crazy, coming out of Thursday into Friday. So nothing too crazy. I think that many are really shocked by the move in gold and silver, and realistically, that stuff's going to happen when you have that much leverage. I mean, what did I tell you? Silver's got 37,800%, paper stacked on top of it, 60 to 65% long at, and increasing around those highs. Right. So, shit happens when things get really volatile to the upside, right? What we're starting to see is volatility to the upside and volatility to the downside, not the staircase up, elevator down stuff, right? Although we did see that a little bit in equities. For gold and silver, though, it was, when you have like massive increase in volatility, understand it can mean revert just as hard. And in some cases, way harder than you would ever expect. Even I wasn't like, I was happy to see it because of my positioning, but even I wasn't expecting a daily candle like that. When you see stuff like this, this is kind of a once in a lifetime kind of a thing, right? I think this was the biggest daily candle in silver's history. So pretty cool stuff. Oil, I did want to check on real quick. If it breaks above 66.42, which it did test on Thursday, we talked a little bit about this, even marked it on the Wednesday candle when oil was trading down here. This is the other contributing factor, is oil moving up and getting an uptrend off of this major support down here between essentially 50 and 55. Talked about this above there, looked to 70, and then above there 75. Understand that this is some pretty big resistance here. So going back to the lows over here, and then the flip into resistance in this zone. So it's either going to get its continuation or it's going to swing above and then try to come back down and correct. Natural gas, had a massive correction and big old gap down. And, it really is supply and demand in this case. So, yeah, for natural gas especially. Oil, obviously a lot of paper in those markets. So anyway, that's all I got for you today. I know that a lot of people are like shaken by this. I hope for those of you that have been paying attention to my analysis and maybe even some of the analysis of some of the other traders that I hang out with on stages, I hope that you were prepared for this, right? And stay prepared, right? Know what the levels are. And when it comes to Bitcoin, don't sweat it. Like cheaper prices and this whole like narrative about the Bitcoin versus gold, and it's just performing terribly. And well, when gold and silver were performing terribly versus Bitcoin, what people were doing? They were buying it when they saw the opportunity at certain levels, when they saw that it started to crack back into an uptrend off of those bear market lows in 22 into 23, right? We talked about this at the time. A lot of you didn't know me at the time, but I was talking about this with various groups on various Spaces events and right here on video every Monday, Wednesday, Friday. So, identify the opportunity, right? Bitcoin goes down, the further it goes down. If you're here, you already know that we're moving forward with Bitcoin adoption, not backwards. And this is, opportunity. Pick your levels, though, and have an accumulation plan. Understand how to ladder into your position, whether it be, swing positions if you're a trader and you want to take longer term trades, or, if you're accumulating. It's opportunity. Identify it. The narrative will shift when price action shifts. So that's all I got for you. I know this is a longer one, but it's kind of needed, I think, right now because of where things are trading. And I want to wish you a wonderful weekend, a wonderful morning, afternoon, and evening, no matter where you are in the world. Please trade safe. And of course, as always, stay safe. With all of that being said, Landy out. Take care. Talk to you Monday.